day, ladies and gentlemen. My name is Akaisu Michael. I'm here to drop my analysis on AXS perpetuals. All right. Now, if you are conversant with how I analyze, by now you should have understood that algorithm is the driver of price. Definitely, algorithm drives the market, not the banks, not whoever you call their names and all that. They have no hand in the market. Algorithm solely does the work, and they do this job using four principles of which I have talked about in the past in my previous analysis. So we don't need to go back and start. This is what is this. This is that. That is that. I'll just go straight to the point here. So now, paying attention to what occurred here, we can see that what a consolidation occurred on this downside that did what now? What did that consolidation do? Consolidation expanded to the upside. And why it was expanding to the upside, what was it doing? Please take note. Why algorithm is doing one thing, they are doing one thing with the aim of what? Creating a space for another thing in the nearest future. Alright. So when you see algorithm getting to a zone, the zone they are getting to is a zone that has been created in the past. Okay, every move you can see in the marketplace today, all moves you see in the marketplaces today, maybe tomorrow, next year, next 2 years, any amount of time, are what? Are places that algorithm themselves has created in the past for what? Future re-entry. Because that is how the market is created. The market is created from the past, in the past for the present, and the present goes back, the present mitigates what the past has created. And why it has mitigated what the past has created, it is also creating something for the future. So when the future comes back, it mitigates that zone and it goes away in line with market structure. That is how the market is being created. All right. So don't, when you see this occurring in the marketplace, don't be surprised or don't think it's just happening. It's something that the algorithm themselves have kept hidden, and those levels and those zones and those areas that was has been created in the past for the future is where the banks enter. All right. So now, from what I just explained, you see that this consolidation expanded to the upside. A new entry level has been created here. So this consolidation is where I see this price coming to here. Then from there we go back up. We go back up. All right. So see it, and let's understand what I am saying. So looking at it clearly, you see what this consolidation expanded to the upside. Why it was expanding to the upside? It created voids. These are all voids. These are all voids. All right. So these are all voids that was created to the upside here. It's voids, all voids created to the upside. And while it was moving, please pay attention. Please pay attention. I need to remove this. You see, it not only created void. What did it do? What did it do? It also created what? Fair value gap. Fair value gap. And fair value gaps are what? Effects of what? Other blocks or what? Consolidation. So when you see a fair value gap in the marketplace, you should know that what? There should have either been a consolidation that occurred, or what? If an other block around that region. So looking at this now, you see that price is aiming, algorithm is bringing price down to do what now? Here, to fill up this fair value gap, this and this. After this is filled up, perhaps comes back to touch this consolidation. Then from there, we start the up move. We start move the up move back. Then from there, from this level here, from this my region, I expect an upward move in price. I expect an upward move in price. From here, I would love to buy here. I would love to start my buy somewhere around this region here, somewhere around this region here. I'd love to start my buy somewhere here on this consolidation. Okay, then back to the upside, to the upside. This is what I'm seeing. And now please don't forget, you see that while price is even moving down, you see another zone has been created. Fair value gap has been created here, and alongside what rejection block, here. So do not just expect a sudden up move in price just like that. No, we could have a rejection here, that after coming here, a rejection could occur somewhere here. A rejection could occur somewhere here that could drive price, that should drive price downward a little bit, that should still drive price downward a little bit. All right, something like this, something like this, something like this here. Then, then, boom, to the upside, to the upside. All right. So that's just on the monthly time frame. What I'm seeing, I'm expecting price to come back here. While it is coming back here, it is closing up this fair value gap and also filling up this void that was created by this. Don't get yourself deceived. Don't get yourself deceived. A lot of crypto boys always think that hey, Bitcoin is buying, and so invested in Bitcoin, so invested in Bitcoin, this invested in Bitcoin. America has 3 point something billion worth of Bitcoin. All those things will never move price. Well, I used to hear a lot of people saying that it's the masses that move price. Change that mentality. Algorithm is the sole driver of price. The banks, the big boys, they have nothing to do. They have nothing to contribute in price movement at all. What the banks and these big boys, what they are after is the entry level. Algorithm was programmed by the market makers. All right, the market makers, they programmed the algorithm to drive price, and algorithm, while driving price, gives entry in a programmed manner. Alright, it gives entry in a programmed manner of which they are the market makers, and these banks, these whatever banks, the big boys and all that, they are all aware of. Alright, they are all aware of, and bam, they enter, and that's it. The move occurs, the move occurs. So here is where I feel that the bank should enter. This is the next bank entry level here. This is the next bank entry level. Alright, this is the next bank entry level somewhere here. Then from here, the bank carries the market up, carries this coin to the upside, to the upside. We start experiencing an up move to the upside. Alright, going to the daily, going to the daily time frame, going to the daily time frame. What are we seeing? Alright, so everything is just so clear. It's just so clear. Like, algorithm is the driver of price. Like, wow, wow, all so clear. You see, banks entered here, banks entered here, the banks entered here, the banks they entered here. Alright, they were not here. The banks were never here. This was where they entered. You see, instantly to the downside. The banks were inside here. The banks were here. This expansive move. They were the banks. They were the banks entry. Alright, so you see again, the banks, the banks, the banks, and you see the banks have entered now. The banks have entered here. The banks have entered here. All right. Let's ignore all of that for now. So what is occurring? What is occurring? Price is being driven to the downside, and how does price move? If you watch my previous video, I told you that there are just two major things that the algorithm does. It goes for stop loss. After it takes out stop loss, it comes back to rebalance itself. After it rebalances itself, it also goes for another stop loss. All right, let's see how it worked out here. Of course, you see, what do we have? What do we have? Consolidation. See, we had a consolidation. This consolidation here did what? What did it do? What did this consolidation do? It took out these stops. Took out these stops here. Took out this stop. After it took out this stop, what did it do? It came back up to do what? Balance itself. After it balanced, bang to the downside, taking out this stop. After I took out this stop, what did it do? It comes back to rebalance itself. Now, why it's rebalancing simply means what? It's filling up the void. This is a void. Inside this void, what do we have? Fair value gap. Algorithm comes back, fills up the void, is balanced. What happened? The banks enters, bank to the downside. To the downside. Doing what now? Taking out these stops. Taking out all these stops. After I did that, what do we have? Comes back down, then up to do what now? What did it mitigate? What did it mitigate? See, breaker block. Can you see? Breaker block here. Market structure is key. In line with algorithm. Market structure and algorithm is key. You see, after I did that, what did it come for? What did it come for? What did it come for? You see, this stop loss here. This stop loss here. Can you see? Came for this stop loss here. This stop loss here. You see, where is it headed to? Where is it headed to? Please don't always forget. Price would keep on moving in line with where it is headed to. All right. And from the multi time frame, where I showed you on the multi time frame here, you would see that what price is headed to where? It's headed to where now? It's headed to where? This reason for what? The expansion. Alright. So every move that occurs will be what? Will be a move coming down into what? This level here. And don't forget, what did I tell you? Algorithm moves for what? Imbalance and what? Stop loss. Imbalance and stop loss. Where's your imbalance here? See? Fair value gap. This is where algorithm is coming to close up this imbalance, mitigate this other block. Then after that, where is the major point of interest again? This other block, this stop loss here, this stop loss, this one. So price enters this level, the banks enter. After the banks enter, what did they aim for? What did they aim for? This stop loss, this stop loss. It's just a key. It's a principle. It's a principle. That is how they work. That is how algorithm works. Just two principles. And these two principles operate on four other principles. Alright. If you are confused on what I just said now, our website is down below. Our website is down below. You could make use of our website and subscribe. So all of this will be cleared out to you. Alright. So let's go back to that monthly time frame. Let's go back to that monthly time frame. There's something I want to bring to your notice, guys. Let's go back to the daily. Sorry. There's something I want to bring to your notice that you guys should always have in mind. The banks don't enter everywhere. And again, if you have this mindset again, two things occurs. Once price has gotten to a level, the next thing that occurs is what? Coming back to close up what was created in the past. Impulsive leg gives birth to retrace sorry yes, impulsive legs gives birth to retracement. And during impulsive leg, in an impulsive leg is where we have what? Future prices, future re-entry points. All right. So once you spot an impulsive leg, what you should be looking for is, what did the algorithm create for the future re-entry? That should be what should be in your mind. Once you see that, the next thing you will notice is what? A retracement. A retracement is always the next thing. A retracement is always the next thing. All right. All right. After an impulsive leg, retracement follows. Retracement follows. Look at something here. Look at something here. Can you see this consolidation here? Can you see this consolidation here? Oh, price didn't get there. But what did price come to do? What did price come to do here? You see, this is a void. This is a void. You see, this is a void. And inside that void, what do we have? Fair value gap. Can you see? Can you see? Fair value gap. Which price came to what? Fill. And my point of interest would have been what? The last liquidity region which the banks cannot refuse. Can you see? The last liquidity zone here, of course, see it, which was perfectly sniped here. Alright? Yeah, it was perfectly sniped. Of course, see, took price to the upside, took price to the upside, took price to the upside, touched, touched, perfectly sniped, and took price to the upside. Alright, so you see, that is how the algorithm works. So after doing that, it took price to the upside, creating void, and you see, this price, all this movement was to do what now? Was to do what? Fill up all these voids that was created. See, all of these are voids. And you see, algorithm comes back, fills all of them up while still heading down. We're still coming down to where now? Can you see? This is a consolidation. This is a consolidation. This is where price is coming to here. And once that is done, to the upside. And now please don't forget, can you see how market engineers liquidity? See, liquidity, 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 liquidity for what now? This level here. Once price gets here, they have created what? The means of another future movement. Alright? Right? This is how you know what is when it's time for an uptrend and when it's time for a downtrend. Once price comes here, there would have been enough liquidity for what algorithm to aim for. All of these are stop losses, stop losses, stop losses. That once price gets here, this will now be what all of this will be the what the algorithm points of what target, point of target. All right. Um, a recap. Headed to this level here. Headed to this level. Then from here, I expect some nice bullish run to occur. All right. I wish you guys good luck.